Hey guys, welcome back. Today we are solving the December 23 and 2023 Pgbp problem. Okay, this is a kind of problem where they will give a P&L and we have to we have to add back what are all the expenses allowed in the what are the expenses debited in the P&L, but in from income tax perspective those are not allowed, and remove the expenses which are allowed by the income tax act. Okay, and what are all the other incomes also we have to reduce. Okay, so let's quickly start the problem. Okay, computation of Pgbp income. Okay, for the year ended on 31st/3/2023, right? Okay, particulars rupees. Okay, so what's the net profit? We have to take the first step is to take the net profit as per P&L account, right? What's the net profit? Net profit is 1,80,150. Add what are all the expenses debited but not allowed. Okay, what are those expenses? Let's quickly see that. Okay, establishment charges allowed, rent rate and taxes allowed, sundry expenses allowed, household expenses allowed, provision for bad debts is not allowed. Add back provision for bad debts. How much provision for bad debts is 1,200. Next item, loss on sale of motor car. Okay, loss on sale of motor car, for this is for private purpose used, not this is not considered. Loss on sale of car, private purpose. Okay, how much? 1,800, right? 1,800. Then salaries is accepted, salaries allowed, insurance premium is allowed, but life insurance is not allowed. Okay, so add back the life insurance. How much? 1,790. Then interest on bank loan allowed. Provision for depreciation is not allowed, so provision for depreciation will remove. Any provisions income tax won't allow. Only if we pay, then only will income tax will allow. Okay, so 6,400 we have added back, right? 1,200 plus 1,800 plus 1,790 plus 6,400, which is 11,190. 1,200, 1,800, 1,990. Okay. Now, so that's it. We have taken everything, and always the things what they are giving in the additional area, no, that will be always constitutes to the income tax part only. Okay, those are all income tax adjustments. Okay, less what are the things we have to remove? Bad debts we have to remove, so expenses allowed but not debited. Those things we are going to now debit now. Okay, those things we are going to remove now. The first thing is bad debt allowed. How much is the bad debt? 650. Then admissible depreciation 1,600. Then anything. Yes, the next thing is the assessee is running a business in a rented property, half of which is used by his own residence, and rent of 2,400 in respect of entire houses included in. Okay, he has used one property. Okay, he has used half of its property for his own purpose and half of its property is rented. No, so rent of 2,400 in respect of houses. Okay, the entire house is rent is 2,400. He considered everything as expense. Only 50% of his can be allowed as expense, right? Only 50,000 allowed as expense, right? So add back rent 1,200. Guys, instead of putting here, we should not put here. We can put in this area because half of it disallowed, no. So whatever debited there, but not debited by, not allowed by income tax should come where? Should come there, no? So we'll add here, which is rent. How much rent is disallowed? Half of the rent is disallowed. Okay. And the municipal, the parents rupees 5,000 in account of tax paid is given on rent. Okay, this is also disallowed. For the rented property, he has paid that amount, so that is not relevant to our area for Pgbp. So we'll remove that also. And is there any other business expenses? And this household expenses is like a personal expenses, so we should not add that. Household expenses also we should disallow. Okay, right, 1,080. Now we have removed the allowed expenses, which is bad debt and depreciation, and other incomes also should be removed from here. Interest on government securities, which is IFOs, and rent from property, which is IFHP, 5,350 or 5,400. Okay. Now what's the total? 650 plus 1,600 plus 5,350 plus 5,400, which is 13,000. You have to remove. Let's total this 1,000, 1,000. 14,770 Pgbp income. Yeah guys, that's it. The answer is the problem is over. The thing is, what are all the things which is already debited in P&L but not allowed by income tax act should be removed, should be added back, and what are all the expenses actually allowed by the income tax act should be that only should be deducted. That's it. Thank you.